So I'm going to try as much as I can to run to our usual type of in-person format. So thank you so much, everybody, for attending. I was thinking that, you know, now we've got this technology that every single practice in the land would be doing one of these, and I'd be like at half a dozen people if I was lucky. Hence why I did it this format rather than our usual webinar formats for our other stuff. So, I've therefore got Pete here to help me from Flair, who helps us with our big webinars. So over to Pete first.
Yes, thank you, Nikki. I've got too many screens and I need to find the camera. Morning, everybody. We are going to be running this slightly similar to our webinars. So I'm going to be trying to use the chat function. So what I would like to ask is, as we go through, Nikki's identified for me some places where she wants to pause and take questions. Make sure she covers the ground over the key points. So if you have questions, could I ask you to please pop them in the chat, or put your hand up and I'll come to you in the chat. And then when we get to the break point, I can either ask them on your behalf, if that's what you would prefer, or you can just step forwards and put them into your own words. Just to make sure everyone's found the chat. I know we all know how Zoom works these days. It's
Morning, Lynn.
Yeah, morning, Lynn. Move the mouse, chat button appears at the bottom, and then hopefully the chat appears to the right. Could I just ask very quickly to make sure we've all found it? Who watched the budget live and who didn't? So yes or no on whether or not you watched the budget. And then anybody who's on the phone, I apologize. If you do have a question, please feel free to sort of cut in at the point where we stop for questions. I'll try and make some space for those people who are just on the phone. So hopefully that's all clear. I would ask if you've got any background noise as well, could you pop yourself on mute just to make sure that we don't have the screen jumping around. Okay, Nikki, back to you.
Super. And I have told my son, clearly, please do not come and disturb me till well after 10 o'clock, so, unless it's an emergency. Okay, so there was a huge amount in the budget. Some that was all leaked beforehand, so that people will be fairly familiar with. But there were also some quite interesting announcements within it as well. So as usual, I'm going to try and focus on the most important things that are relevant to business owners for their businesses and for them personally. If you have any questions, as Pete said, do not be afraid to ask. There's no such thing as a silly question in this, because it was all, from Wednesday, it was all new to us. So I have read, since I was obviously watched budget, and I've been reading about everything I possibly can ever since. So, but if there is any question that I can't answer straight away, I promise I will come back to you with one of our tax experts' opinions. You will find, however, there are some things that get announced in a budget that they don't actually give you all the detail, not for several weeks. So there are some things that, you know, nobody knows yet because they're still working them out. Okay, so first of all, as always, I'm going to just do a quick overview of where we are. So this is my Chris Whitty moment for my first slide, please, Pete.
Indeed.
So what we're going to see is the GDP forecasts. And I say forecasts because any of you that have been trying to forecast for your business over the last year, you've probably got at least half a dozen forecasts because it changes constantly at the moment. So you'll see at the top line, that's the forecast that they that the Office for Budget Responsibility had back in March 2020. In some ways, quite surprised that they didn't take into account more of the effect of coronavirus at that point. Because I mean, we were certainly advising right from the get-go that we were expecting this to have a 12 to 18 month impact for all of our clients. But you can see there's several different scenarios, and there's a very big range in those scenarios. So the medium one is that things are working fairly well. Track and trace sort of fairly well works, and all of the other measures. The top end, so the top end is then going back, the upside is going back to the original March 20 forecast. And then we've got the worst case. Now, I personally, I have seen last 3 weeks have been absolutely phenomenal. There's a huge amount of positivity, and especially because we've got a fairly clear roadmap, and obviously the vaccination program is going really, really well. Obviously, it's very sector dependent. There are some businesses that have had people on furlough since March, and they still may not be having them back for a very long time, especially if you're, so for example, in the large events area, because if you're organising a large event, you typically plan at least a year beforehand. So you're not going to suddenly be able to put on a super large event in September. So that's where we are. It's, you know, it's looking to start to get back to where we hope it will go. But you can see how much of a dip it went. The out one is what is the actuals. So that's, it really did a big dive. But let's fingers crossed, touch wood everybody, we're back onto the recovery. So the next one. Okay, so I thought this was just interesting. Everybody's always talking about the cost of the coronavirus crisis. And obviously, you know, we're going to have to do all the work to make sure we pay it all back. So I just wanted to show you what the figures at the moment are looking like. So these are in billions. So we're just shy of 350 at the moment. But also what's interesting is a split in where has that money gone. And you'll see obviously a huge amount has had to go into public services to get us through, a large amount for the households, and actually the part for businesses is actually you know, the smallest section. So, you know, yes, thank you, Mr. Sunak, but it's not, we're not the biggest area. So next one. Oh, right. No, that's it. Off. We can take off now. Okay. So the key points are, so I'm going to, all of these ones now, I'm going to go through at different amounts of detail. So the furlough extension.
Okay, no worries. See you later. Thanks, Nigel.
Restart grants, recovery loan scheme, VAT cuts, corporation tax. That one I've certainly spent quite a bit of time on because that's quite complicated, what's going to be happening. The super deduction tax credit scheme, again, that's fairly complicated. The apprenticeship incentives, you know, so just some more nice incentives there. SDLT, SEIS, R&D tax credit, and then all the frozen. There's a lot of frozen taxes as well. So firstly, going into the furlough extension. Okay, so this was leaked well before the budget, so this won't be much of a surprise to anyone. At the moment, now the new extension, until it might get extended again, who knows, because it's already been extended about 6 times. It's now extended until the 30th of September 2021. It's going to carry on in its current format, with format at the moment, so the employer pays the NI and the pension part. In July, however, the employer has to contribute even more, so it goes up to 10% of that. So I have already noticed a lot of employers making some decisions, either making sure their employees are all back for July or making some very difficult decisions. Then next, in August and September, the employer has to contribute even more. They're having to contribute 20% at that point. Another thing to bear in mind, that if you have anyone on furlough or going to put anyone on furlough, Anyone from furlough from the 1st of December 2020 is being published online by HMRC. So your suppliers and your clients can see that. And in fact, of course, your employees can see that. So this is to reduce the likelihood of any dodgy claims. I've already had somebody call me that was surprised that they were on, not one of my clients, not one of companies of my clients. So it was that said about you know, they understand that apparently they've been working throughout, but they found that there's some furlough had been claimed by their employer. So obviously, you know, there are lots of places to report those sorts of things, by the way, because, you know, people shouldn't be claiming for furlough if their people are working. However, do bear in mind, flexible furlough is still available, so it is completely legitimate to be part-time on furlough and part-time working, so that is absolutely allowed. But any employee that has got any element of furlough, they should have been officially notified, and they should be very clear about it, and actually it should be a line on their payslip as well, so it's very clear to them that is what is happening. The next one is the restart grants. So this is for just specific sectors that have been most hard hit. It is dependent upon your rateable value. So the 3 million excluded, alleged 3 million excluded. I say alleged because there are lots excluded, but lots of people argue about the number of that. The grants are only available if you've got premises. These particular grants, there are some grants that are available, discretionary ones where you don't necessarily have to have premises. But the one-off cash grant, so for hospitality, accommodation, leisure, personal care, and gym businesses, and this is the England one. So if you've got Wales or Scotland premises, you'd have to look at the local government for there, but it's £18,000, and that's per premises. The total amount that's being made available is 5 billion for this. For non-essential retail businesses, and those are ones that have had, and all of these have to have been made to close. They were forced to close. So if people have been, open throughout, it's not applicable. But for non-essential retail businesses, they will get up to 6,000 per premises. Okay. So,
Nicky, sorry, just before we move on to the next step, I know we're flying through and these are some interesting points. If anybody has any questions, please pop them in the chat as we go, because I know that we're going to be covering a lot. So I will try and answer some as we go. Like we do with the webinars, we have a big question bit at the end, and I will stay online as long as John isn't really stropping with me about being late for the next meeting. And I will answer every single question. And so, but I want to cover all the core content within the hour so that everybody can see the main items. Okay, so the next section, so I'm going through all the ones that are mainly focused upon businesses that have been particularly affected by coronavirus, but it's in my first section. So the next section is the recovery loan scheme. Now, so this is the scheme that's coming in to replace the bounce back and the civils. The amount available is 25,000 to 10 million. It is a lot higher interest rates, depending upon your business to what interest rate it will be though. They are available from this, at the moment, it's intending to be available from the 6th of April to the 31st of December. Hence that, of course, therefore means that not all the details have been published. And I will ask Lynn a second if she knows any more. I'm assuming she hasn't heard any more bits. It's going to be in the form of, it can be in traditional loans,
but they can be utilised in the form of overdrafts, invoice finance with asset finance. The loan and asset finance can be up to 6 years. The other types are up to 3. If the amount is less than 250,000, there's no requirement for a personal guarantee. But the key thing is that the government is going to be guaranteeing 80% of the finance to the lending institution. So there are going to be obviously criteria to check that you will be eligible. You obviously can't be in liquidation or looking to be, or possibly being, or insolvency proceedings or anything. You have got to show that you are a viable business, or a business that would be viable if you hadn't had the impact of coronavirus. Of course, there will be probably lots of varying different definitions of that, depending on where you go. But yes, so I'm just, Lynn, Lynn's from Barclays. Have Barclays issued any guidance to the commercial teams as yet?
No, we've not issued anything yet. We don't know what it looks like. We'd have to build the product. We'll have to speak to the British Business Bank and find out what the actual bits are. There's inevitably our legal team go back and forwards with the British Business Bank to make sure it's right. So yeah, nothing as yet. Too early. Too early to tell.
Lynn, how long do you think the timescales will be before you've got something ready? That sounds like quite a few hoops to jump through.
Yeah, I mean, if it's anything to do with the Sybil's and the bounce back loans, with the teams will be working over the weekend, trying to get it in place and do all the legal parts, etc. Fingers crossed it'll be in the next week, 2 weeks. We'll know. I mean, I think it was about 3 or 4 weeks, the Sybil's and the Bibbles, but that was a bit more complex than this. We're on the front foot, as in we've got those already. It's just potentially adapting those to fit something else. So yeah.
It does look to be more similar to the old DTI loans.
Yeah.
Yeah. So
yeah, but it's
things to cut and paste from.
Yeah, it's the nitty gritty around what they look like for the client. Yeah.
Excellent. Thank you so much, Lynn. Okay, super. So the next bit, which is particularly available for the hospitality, holiday accommodation and attractions sectors, are VAT cuts. So there was a cut to 5% VAT for those sectors. That has been extended till the 30th of September. Not so good because I hate calculating at 12.5%, because 5% is so much easier to calculate. 12.5% is going to from the 1st of October 21 until the 31st of March 2022. So that's quite a substantial period to really help those sectors come back as much as possible. So this was the point that we're going to pause for a few questions, if any have come up that are appropriate at the moment, Pete.
Yeah, we've had
I'm not looking at the chat, by the way, because otherwise I get distracted.
No, that's absolutely fine. So if anybody does have questions, now is a good time to ask them. Mark has asked, do you have any qualifying details on the 6,000 for non-essential retail and the 18,000 for personal care providers?
Yeah, there's some high level details already on the government website. So there are a few things there, but because they'll be going through local councils, so they should be on the council's websites quite soon.
Okay.
But as with the previous grants, it really did vary from council to council how quick they went through, and although they were all working to the same rules, you did get some variability between councils of how they distributed things. But hopefully these should be hopefully quite straightforward, those ones.
Yeah. Any from how that worked last time, any lessons on how to make sure that you know as soon as they drop?
Right, two top lessons. Get in as soon as possible, because they usually only have a certain amount to each council, so it's first come first served. Second, if they say no on your first application, try again, keep going until, because just because they said no once could be the interpretation of the information that you gave them. You may be able to find that you've got more evidence and to go back. If necessary, do talk, try, and you need to escalate, do talk to your local councillor or your MP. I've seen some cases that have helped with a little nudge from the right person.
Squeaky wheel gets the money.
Absolutely.
So, yeah. Okay. A few more questions coming in now. Thank you very much, everybody. Daksha asked, is there any funding for small businesses that are online apart from Furlough?
Deduction, no, not direct grants and things like that as yet. As always, if I do find anything else, I will let you know. I know your business, but it's from those particular grants, they won't be applicable to your business, unfortunately.
Okay. Also a bit of a bummer for me, really.
Sorry, Pete.
Is this all right, Nikki? You do what you can. Is there any relief for landlords? This is from Rosemary. Any relief for landlords with tenants who've built up a lot of arrears?
They didn't. Well, I didn't notice anything talked about that specifically. Because they have been. I know that has been very difficult for a lot of landlords, especially if they only have one property or whatever, so it's not being able to be diluted in their portfolio. So and the I believe it's end of March now is when they can start taking action against their tenants, but with all the different things in place, I think it then takes about another 6 months. So it is extremely difficult. Obviously what they have had available is if they've got a mortgage, if the landlord has a mortgage on their property, they could have applied for a 6-month mortgage holiday. Obviously that doesn't help them overall in the total thing, but it could potentially help their cash flow. So I would recommend, if anyone that is having really difficulties, at least they've exhausted the 6-month holiday, see if you're not already on an interest only mortgage, go to an interest only. Obviously just delays it and doesn't help your profitability on that particular investment property. But yes, that is a very tricky area, and it has been particularly difficult for the landlords with just 1 or 2 properties.
Okay. We've not had any more questions at the moment. So back to you, Nikki, in 1 second.
Okay.
Just to say, if anybody has a question they'd rather not sort of be a publicly asked question with their name, if you want to send the chat to just me, you can do that at the bottom, just above the box. Just select my name and then I'll anonymously put it forward to Nikki. Anyway, Nikki, back to you.
Super. Okay, now this is very, so everybody here that has a limited company, so this is for a limited company, so if you've got a LLP, partnership or sole trader, it's not applicable. But if you've got a limited company, corporation tax regime is changing dramatically. Nothing is changing though, however, until the 1st of April 2023. So you don't have to panic yet. You have got time to plan for this and make any appropriate changes. And it does mean we've got plenty of time to do any forecasting and modelling for you if necessary. So to work out the best thing for you. So the headline rate for corporation tax will be increasing to 25%. The only upside is, again, that's quite an easy one to calculate. but that's not very helpful for anyone that's got to pay that extra 6%. Now, the government is saying that that still should be attractive. It's still at the lower end for the G7. However, if you look at the whole of Europe, you have got Hungary at 9%. Across the water, you've got Ireland at 12.5%, and they also have a lot of other, give a lot of other incentives to businesses as well. So that is going to be very, very stark if you're comparing if you're going to go to Dublin or you're going to go to London. But then if you then compare it against France at 34.4%, you know, it's a lot cheaper. So there's a lot of variability there. There is some other things that will potentially offset it, which I will go through shortly. However, if you are a small business and your net profits, are less than £50,000, your rate will be maintained at 19%. So there's nothing to panic there. If your profits are between 50 and 250,000, the corporation tax charge is going to be tapered. I'm not going to go into the calculation of that yet. It's one of these little tricky things, but we are used to doing taper relief on other specific taxes. But it just effectively means it's just spread out. But if your profits are over 250,000, every single penny of that 251,000 will be at 25%. I wouldn't, so I would suggest that anyone that will be affected by that does need to do some planning. And I have got an interesting couple slides that I wanted to share with you next. Because the question is, obviously with business owner managers, is how is that going to affect you regarding your mix when you're doing salary and dividends? So Pete, have you shared the
just bringing it
first
up now.
one? Yeah. So I've got the lovely Office of Budget Responsibility on my source of slides as always, because I've been reading through all of theirs. They have a beautiful array. This is showing, so if you're planning to have £50,000 of income we're comparing the year 21-22 to 25-26. So this shows the impact to you. You will see that this is showing the amount of tax taken in thousands. You'll see for an employee, it slightly decreases. That's because the personal allowances and the high rate threshold is slightly, well, the high rate threshold won't change it because that's at 15 going up to 52.79, but the personal allowance slightly changes. So there's slight improvement there. For self-employed, it's pretty similar. For a single director, if you are a single director and your profits are that 50,000, you are actually, your tax mix will be slightly less. And that's due to some of those little allowances going up. However, if you are a single director with a business that you have pretty substantial profits and therefore you're going to be impacted by the 25%, but you still, you want to keep your money in the business and you're still taking out a modest 50,000, you are dramatically impacted. So you can see there that actually means that you would have actually, if you have got a quite, that you could potentially be paying less if you were self-employed. Now, you do have to do a lot of different comparisons, because I'm not saying go and change your limited company tomorrow to be self-employed. That's not what I'm saying. But just on that particular thing, for the tax for that director is significantly impacted. To actually make any decisions about how you want your structure, you do need to take into an array of things, so it isn't a quick change decision. Next slide is also pretty interesting. So if you've been doing pretty well and you're going to be rewarding yourself a little higher and perhaps giving yourself 150,000, you can see that again it is really narrowing between the difference between whether you're an employee, self-employed, or if you're a single director. Go back.
Sorry.
Getting excited there.
Wrong button.
So you can see there's it's getting much narrower. There is going to be some complex calculations made. You may find, to get the optimum thing, is that you may find that you want to increase your salary to have a higher salary mix, because of course if you're salaried, then it means that your profits have decreased and therefore you might be at a lower corporation tax rate. But it is getting a much murkier position. From everything that the Chancellor has said over the 12 months or so that he has been Chancellor, was I think he's coming up to about 13 months, because remember he hadn't been a Chancellor for very long before his first budget. He does seem to not have a lot of sympathy for owner business managers. He sees the tax savings that you have by doing an optimum dividend salary mix. So if you do on the tax take, but of course he's not therefore taking into account all the additional stresses and strains and risks that you have as a business owner. He's only comparing it in a tax position, which is obviously not quite as business friendly as we perhaps would like. But still early days as a Chancellor, things could change. Also, do bear in mind, and I think I say it towards the end, bear in mind 2024 is the next general election. This increase doesn't happen until the 1st of April 2023. I'm not a betting person, but if I was, I might put a sneaky bet on the fact that actual increase might not actually happen, because they got, if they've had a sudden increase, or at least perhaps it might only happen for a year or so and it suddenly can't go back to lower rates before the election. Not that I'm, getting cynical in my old age, but that could be a possibility. So, you can only do your forecasts and your modelling on the information that we have at hand. But I would suggest don't do anything too dramatically changing, in case you do find that things will change again in a year or so, depending on, if we recover really, really fast, which is potential, he might not need to have so much from the corporation tax, but we shall see. Okay, that's
Nicky,
it.
sorry, could I just step in? We've had a question and observation. So,
is it Rosemary's complicated one? A difficult one. I can't remember what SPR actually stands for, Rosemary. But what I do know, but Elliot might know. But what I do know is that it's for when you're having fully impacted by the 25% in those graphs. Elliot, put you on the spot? You're in the know on these things now.
I'm afraid I don't. I'm afraid.
Oh, let me down. You need to ask with your friends there. Okay. So yeah, I was actually I Googled it and everything last night, Rosemary, because I knew somebody, because I would ask me, because I've got so many accountants on this call. But for the life of me, I think it must be single person's rate or something like that. But it's effectively, those graphs are showing the difference between if they're still at the slightly lower rates and then it's going to 25%. Okay, we can take that graph down now. So we're going into another tricky area of what's been announced. And this is, he's had a nice phrase, a phrase that we've never had before. super deduction tax credit. So what this is they are giving 100, so from the 1st of April 2021, so this is, you know, a few weeks time. So if you're going to make any big purchases of equipment, you may want to wait a few weeks, depending on your circumstances. But what this is effectively you're going to get, if you bought a piece of machinery that is for the running of your business, so I don't know, say a printer's press, for example, you know, they're pretty expensive, might be a couple $100,000, if not more. Instead of getting write-down allowances of 18%, that's assuming you've used your £1 million of annual investment allowance. Instead of just getting 18% write-down allowance, you're going to get a first year allowance of 130%. What that means to you is it accelerates your tax relief so that you get the benefit of purchasing it. So what they're trying to do is obviously drive more decisions to buy equipment and therefore drive the economy, etc., further forward. But not only do you accelerate your tax relief, you get additional tax relief. So it's almost reminiscing of the R&D credits, which you will find there's some changes to later as well. So that's a really, really good incentive. So when you're looking at the decisions and the ROI of whether to buy a particular piece of machinery or plant for your business, that's a really important bit to go in, because when you're calculating your ROI, that additional tax relief could be the difference between making that decision to buy it sooner rather than later. So that's really valuable to a lot of businesses. Not so valuable, no, you know, it is valuable to everybody, because even the businesses that were all comfortably within the £1 million AIA, you know, you've got that extra 30% there. So that's, you know, it's money for nothing, which is brilliant. We like that. The other one is they've got a 50% year allowance on some qualifying special rate assets. The period at the moment they're talking about for the super deduction is from the period from the 1st of April 2021 to the 31st of March 2023. So it's only a 2-year period at the moment that they're offering this. There's not full guide. Well, I certainly have not found the full guidance on it as yet. You do have to very carefully check which plant and machinery would actually look. I was looking if electric cars would be in there. I don't think electric cars are going to be in there, unfortunately, because there was something about Section 6 not being allowed in. But there will obviously be, our tax guys will be forensically going through it the next few weeks, so we will know exactly which things will qualify or not. The items have to be unused, and they have to not, and they cannot be second hand. So I'm assuming when you mean unused, it means it's not been a demonstration bit of plant, rather than being second hand. The current 100%, now this is interesting as well, because normally with these things, they roll on the fiscal years. The annual investment allowance, so that's the amount up to 1 million, that is going to go up to the 31st of December 2021. So that's really important, because there's, you know, if you're ordering these sorts of equipment, often there's quite a long lead time. So they're not necessarily things that you just go, right, I'm going to go tomorrow and buy it. You know, that there's, you know, might have to import it as well. So you've got to look at all the import duty stuff. So it's to do carefully map out. I already had one of our clients a couple of days ago he's making decisions, got £175,000 purchase he's intending to make. Does he do it before the 31st of March, or does he do it on the 1st of April? I think the answer is going to be the 1st of April, especially as it's 30th of April year end anyway, so it works quite well. Now, I am going to pause for questions at this point, just in case there is any, because this is I think one of the areas that is going to affect the majority of people in this call and is all going to be really new to everybody.
Okay, so yeah, if you have any questions, please pop them in the chat. While those come in, we've had some guesses at the what the SRP stood for, small profits rate.
Oh yeah, small profits. That probably is what it is.
Yes. Just out of interest, Nicky, this is just me. The tapering. Do you anticipate it'll be a straight line between 19 and 25%, or do you think they'll curve it a little?
It's a complicated little calculation that you have to go take one number, put it on top, divide it by. So it's sort of a bit. It means you get a bit of a high effective rate between the 50 and the 250.
Right. Okay. We've not actually had any questions coming in.
Oh, I must have just explained it really.
You've just done a brilliant job, Nicky.
It's just so difficult. No, everyone's got a headache and doesn't want to think about it. One of the other. I'll take the first. Okay, so some other key things which I think are important to point out. Apprenticeship incentives. Apprenticeships are fabulous, obviously. So you've got now a potential £3,000 that you can get. That was formerly 1,500. Just do be careful. There are, there's always seems to be loads of caveats of whether you actually ever manage to get these. So don't just go and hire 20 apprentices and assume you're going to get 60 grand. Do just check with your apprentice provider that you will qualify. But, on the face of it, that looks pretty attractive. And there's a flexi job apprentice program as well. There's also a Kickstarter program as well, which was announced quite a while ago. So I know a few of our clients have been looking at that as well, because obviously the unemployment's gone up. So obviously the sooner that they can reduce the unemployment back down, the better. Hence why they're trying to do these apprenticeship and Kickstarter programs. The next area which...
Nicky, could I just interrupt? We did have a question. We were a little quick to move on. David asked, he has a client thinking of spending 50k on a new piece of kit now. Should he advise them to hang fire until April?
It's not a definite yes or no, because you have to look at what your financial year end is, cash flow and things, but you should, it should be quite straightforward for their accountant to look at the comparison, as long as they've got their forecasts of profits, to do a comparison of what the difference would be if they bought it on the 31st of March or the 1st of April. And I would think in a lot of cases it will be the 1st of April. However, if you've got a 31st of March year end, you've got to then think, well, actually, you're not going to get that benefit for another year. So it may not be the decision just about the total tax saving. You might be wanting to look at the cash saving. Because obviously at the moment, cash is king. I mean, apparently, allegedly, there's a lot of companies stockpiling cash and people stockpiling cash, but, that's not everybody. So that could be a key thing. So you have to take into account the overall tax bill, but also the cash implications. One other thing interesting on the corporation tax is that losses, usually you take losses back a year, unless they're terminal losses, and you can then go back 3. You can now take losses, there is a limited amount, I think it's 2 million, but you can take, if you've had, so people that have had a really bad year and have got significant losses, they can therefore take them back 3 years and therefore get some tax rebates. So if you are in that position and you in the last 3 years had profits that you can offset that against and therefore get a tax rebate, good idea to do your accounts as soon as possible. The sooner you do them, the sooner you get that relief.
Nicky, just one question on this as well. The cynic in me, when things like this in the past have come through, the super tax deductions, have we seen suppliers of the associated goods try and snaffle a little share, maybe by increasing prices, or is that something that doesn't tend to happen?
I think at the moment that's not impossible. I think more likely that they will use this as their marketing tool.
Right.
For selling it, you know, because their marketing tool for make sure you buy these things in the next 2 years. Because as I said, some of these things may have a fairly long lead time to be built, you know, especially really big bits of kit, which could be bespoke. So it more like marketing. However, there is in lots of areas, there are big supply chain issues, Brexit implications, but also supply chain issues due to coronavirus and you know, factories having to put in the social distancing measures and everything. So actually prices are more likely, I'm not an economist, but I would say that they're more likely the prices are being affected by the supply and the resources available to make the things, plus the impact potentially of Brexit. Okay, but good question. Stamp duty land tax. So if you or if any of your family are trying to sell a property at the moment, you'll know that there's been a massive queue at the conveyancers, and lots of the conveyancing companies have been so busy, they've been turning work down. However, the government have recognised that, and they've seen that obviously that it has kept the housing market going. So the nil rate band up to £500,000 has been extended to the 30th of June 21. So that's keeping the housing market alive. And then from the 1st of July 21 to the 30th of September, the nil rate band is going to be 250,000. So there's going to be a lot of busy conveyancers.
Lynn has actually said that she's got some more information on the recovery loan scheme.
Perfect. Over to Lynn.
Lynn, over to you. Breaking news, everybody.
You're a saver.
Literally just landed in my inbox. So the purpose of the scheme is aims to help businesses affected by COVID-19 and can be used for any legitimate business purpose, including managing cash flow, investment and growth. It is designed to appeal to businesses that can afford to take out additional debt for these purposes. Nicky's gone through the amount. There's no turnover restrictions on this loan. The loan will be up to 6 years maximum. Interest and fees. So interest and fees to be paid by the business from the outset. So if you think about the Sybils and the Bibbles, you've got 12 months free where the government paid. This loan you'll be paying straight up front. The government guarantees for security. The government guarantees 80% of the finance to the lender to ensure they continue to have the confidence to lend to businesses. The customer will still remain 100% liable for the debt. No personal guarantees will be taken on facilities up to 250,000, and a borrower's principal private residence cannot be taken as security. So that's the same as the Sybils at the moment. Businesses who have taken out a Sybils or Bibbles facility will be able to access the new scheme, although the maximum they are allowed to borrow will depend on the assessment. So obviously you've got to be able to afford to make those repayments, both repayments, to qualify. Credit checks for all applicants. So if you think about the bounce back loan, there was no credit checks. There are credit checks for this loan. The scheme closes, which we know, and there is no business interruption period with the new scheme because interest and associated fees are charged direct to yourselves rather than being charged to the government. So that's all I have so far.
That's brilliant. That's fantastic. Thank you, Lynn. A question which I've seen a lot of businesses and some thought leaders say, with the credit check side, lots of people's credit scores have been dramatically affected over the last 12 months. So will there be any understanding, or is it going to be a blank, the computer says no, it's in the wrong thing?
No. So obviously we can overturn when the computer comes up and says, you know, potentially straight decline or whatever. We can then override that and just go through. So I expect the bank will have some sort of formula sitting in the background for these types of loans. So it will say, right, okay, if there's a fraud or there's some sort of thing, then that will decline it. Yeah. So it won't decline it on the fact that the credit rating's gone down or anything like that.
Are these loans, sorry, you might not know this is yet, but these loans, are they only going to be for building your current business, or could they potentially be utilised for, say, but you know, it's lots of businesses struggling buying another business, you know, but snapping up all the competition.
Yeah, so it literally says here, which I read out at the beginning, including managing cash flow, investment and growth.
Brilliant. Okay, start listing the practices we want to buy. Fantastic. Thank you so much, Lynn. That's brilliant. Okay. I just want to if we just have a pause on questions, really want to get on to all of the last bits before we finish up to the 10 o'clock bit, and then as I said, I will go through any question that comes up, but I just want to make sure I do cover every bit. If you are self-employed, as in a sole trader stroke partnership type self-employed, and have been getting the self-employed, the SEISS grant, there is a 4th and a 5th grant, and the availability of that has been widened. So if you've done if you only became self-employed in the 1920 tax year, you will now potentially qualify it, because you don't definitely, because it depends still on certain things. You also, because you remember, or if you had it, it's based on, you had to not be over 50,000 profit total income chargeable over I think it was a 3-year period. Of course, we're now a year on, so that actually may bring some more people into it if their profits have decreased. Of course, if it just happens to be that changes the percentage, you might go out of it. But there's a 4th and a 5th grant has been, but you have to have had your 2020 return had to have been filed by the 2nd of March. If your turnover has been reduced by 30% on a comparative basis, then you will get the full grant. If not, you will get a reduced amount. So it is getting a bit more complicated. It's still capped at 7,500 for that each 3-month period. Next one, so I did mention earlier R&D tax credits. They are going to be capped to £20,000, but plus 3 times the company's total PAY and NIC liability. There is a consultation going on at the moment. So if you've got any particular interest in R&D, do go and contribute to that. So I'm sure there's going to be a lot more things announced on R&D, but that's a sort of headline at the moment that looks to be some changes afoot. Okay, just quickly, frozen taxes. Their income tax personal allowance, it is going up for the next tax year to 12,570. The higher rate threshold's going up to 50,270, which is good, actually. I preferred it at 12.5 and 50 because they were easy to calculate. But anyway, it's going up slightly, so it does actually mean, hopefully, to some people, some extra pennies from your pay slips or on your tax bills. But at the moment, they're intending to freeze those allowances and bans from April 22 to April 26. So there's some potential certainty there until it get to change their mind again, obviously. Inheritance tax thresholds are frozen until April 26. Fuel and alcohol duty frozen for 1 more year. They haven't said to 26, that's just they've said frozen for 1 year. Lifetime allowance for pensions frozen at 1,073,100 until 2026. There is some other stuff going on pensions, but we're nearly at time. But if there is, I will bring Mark in for that, because he probably knows a lot more detail on the pension side than me. That's Mark Dolby, because we've got several Marks on here. Then capital gains tax, that's a relief to a lot of people. we had a deal pushed through last week just in case for a client, but capital gains tax, the allowance is going to be frozen at 12,300 and the percentages aren't changing. So in summary, the overall feel of the budget was huge amounts of optimism, lots of talk about potential green investment. I'll believe the green investment when I actually see it, because I have been a bit disappointed about some of the amounts announced and then you find that actually only fractions spent. But if they can actually start spending some of that, because you do have to remember, when they announce an amount of money, that doesn't mean it's actually all going to be spent. So like you'll have seen, like the green home funds, very little of that has actually been spent so far. There's a lot of excitement about free ports as well. If anyone wants to chat about me about what Freeport is, I'd be delighted to talk about that with them later. There's when forecasting recovery, just do be careful. Do have I would have you know, what you're hoping it to be, but a good case, but also a worst case, just in case that we are slowed down by another surge or variants. I did hear this morning that the over 80s getting a bit excited. Over 40% of them have been breaking lockdown rules now that they've been at their jab. So let's see if that does have any effect on the numbers and if that changes the roadmap at all. There was very little mention of Brexit, but as it was the government that brought it in, you would perhaps not surprising. Personally, I think it's still too early to understand the full effect, because a lot of businesses that were going to be affected by Brexit stockpiled. So until they run out of their stockpile, they won't be actually ordering the stuff through. So we'll have to see how that ends up affecting. At the moment, they're saying that the number of lorries going in and out of the ports is the same as pre. So it's no effect, but we'll have to see the real actuality when we've had a longer period to assess, I think. It's really essential that you really consider your optimum salary and dividend mixes. That's going to be getting a lot more complicated going forward. And as I said earlier, you know, I am skeptical. Is the corporation tax increase actually going to happen, or is it actually going to be temporary? Who knows? The general election is 2nd of May 2024. So we'll see what shenanigans happen just before then. So thank you very, very much for listening. Oh, I'm 10:01, just 1 minute over. So thank you very much for everybody for attending. As I say, I am going to stay online for any questions. You're obviously welcome to listen to those questions and hopefully an answer. But thank you so much for attending. I'm delighted it was so popular. We are doing a recording and we will share that on our YouTube channel. So please subscribe. We have a competition.
You become an influencer, Nicky.
Our YouTube channels, and I am failing. I've got the lowest people on our YouTube channel, so please do subscribe. So Pete, any more questions?
Yeah, we've had a couple of observations more than questions, although I saw Rosemary had her hand up a second ago, so I don't know if she wants to step in, but I might be about to ask her question for her. She mentioned that the stamp duty threshold is different for non-residential property purchases. And I'm presuming there was a bit of a question behind that. Rosemary, do you want to come off mute and ask?
You want to know about the thresholds if it's non-residential?
Yeah.
Let me double check and come back to you on that, Rosemary. I didn't particularly look much on the commercials. I'll check. I expect it will be affected, but I will double check that and come back to you.
Yep. And then I don't know if you want to have a quick dip into the chat, Nicky, Maxine dropped a little bit of information sort of related to the purchase of capital, which
Yeah, because Maxine, actually, she's a great person to speak to if you're having to finance a bigger asset. She knows.
yeah. So do you want to just give that a quick skim?
Yeah, that refinancing. Yeah, so that helps with your cash and refinancing. Just remember, obviously, you will have already sorted out the capital allowances from the tax position, so the tax position won't change. But yes, it certainly could help you on the cash side.
Yeah, so I think that's in the chat for everyone to see if anybody wants to have a quick look at. And then we've not had any other questions come through. I was going to ask one. If the capital gains tax changes sort of remain in place, again, given historic changes in tax, do you anticipate that the year before they do, that there might be a bit of a spending spree on capital and so on to try and reduce profit? Well, no, sorry, a deferment of spend. Yeah, so yeah, I've got it the wrong way around. But yeah, do you know what I mean?
Potentially, but who knows at the moment? It's so volatile.
Yeah.
So you know, some people may now think, well, actually, I'm going to hang on to something a bit longer, see if the price goes up again before actually disposing. So Nigel might have a view. He's into. Nigel, what's your view? What do you think? How do you think it's going to affect it, businesses selling, or seeking investment? Thoughts? You're on mute.
You're on mute, Nigel.
Clicking the wrong one. Hi everyone. I think with all these things, commerciality has the overriding effect, and with the sort of age groups of a lot of people who set up business, the baby boomers and such like, I think those sort of things can't change. But whatever the tax regime, and certainly with it being the same on capital gains and entrepreneurs relief and such like, which probably a year ago we may have said would have changed, I think that market will probably increase, because people may have sort of suppressed their plans over the last 12 months, and we've noticed obviously a suppression within the M&A. So my gut feel is I think some of these decisions, a number of them, people generally sort of, once it's a normal playing field, get on with their plans and the regime, and unfortunately we all have to adopt to what the rules are and try and do things in the sort of most creative way, which I know the sort of accountants all listening, and yourself, Nicky, would probably, you know, be able to guide us on that. One thing I did wonder actually, and we're going to put on the group chat as a completely separate issue, is with the corporation tax and the changes in previous regimes, maybe going back over 10 years, where somebody had the shareholding was the same within a corporate entity and a limited company, the taxation allowance was reduced. But there's none of that here, is there? So if you're a separate limited company, you own one separate limited company 100%, you own another separate limited company 100%, that's not then considered any joint entity. Does that make sense?
Well, they're just sister companies.
Completely separate, but if the same ownership or the same people own both the companies, I think it was 10 or 15 years ago, maybe a bit longer, showing my age, but those your sort of allowance was then put together because it was the same ownership. But there's none of that in this.
Not that I've seen yet, but it definitely looks like the capital allowance and stuff is going to be. I mean, the stuff that I was reading of what has been issued is very complicated, so you do have to look if it will be. But yeah, I don't know at the moment. No, it's per company, or if you're in a corporation tax group.
And I suppose on sort of not knowing everybody that's sort of listening on our sort of levels, there is some sort of cross-company invoicing that could sort of suppress it to maximise the tax benefit, so to speak.
People would only be invoicing, of course, Nigel, if it
For
was
management.
ultimate service or product between
course.
those companies, obviously. Yes.
That goes without saying, Nicky. Goes without saying.
Yeah. And
I was. It's possibly a similar thing. So when the change to corporation tax comes in, assuming it does, would you anticipate that businesses will just suppress expenses to maximise profit in the lower tax year? So if you're selling to any bigger businesses, anticipating your forecasting that you might be fighting a losing battle to bring forwards in that run up.
Yeah, or they might buy the big bit of equipment, because then of course that brings it down and then put it back into the lower rate. So there's going to be some big decisions being made. If, however, you've got millions of pounds of profit, you've got less ability to be flexible. But yeah, those businesses that might be on, say, 300,000 profit, they might be doing some jiggery pokery, especially I think in the, might be increasing the salaries, which will decrease the profit. Yeah, rather than take dividends. But we've got to, we've got some different models and calculators to look at each individual's scenario to work out what will be the best thing to do.
I think unless anyone has any other questions, I think we can round up.
Super. Well, thank you so much, everybody. Lovely.
Thank you very much, Nicky.
Pleasure, Rosemary, and I'll get back to you later today on your stamp duty. So I do need that for a couple other clients, actually.
Oh, okay.
I need to check it anyway.